Welcome back. Now, the big story of the day that we've all been talking about through the morning, and it has to be the sectors and stocks that will be impacted amidst the upcoming GST rejig and our exclusive news break on the developments. Now, to help understand and break this down for our viewers, Mangalam, Vinny, Sudarshan, all of them are here to tell us the impact of the sectors and the stocks. Mangalam, first to you, what are the stocks that are likely to see a thumbs up because of this rate rationalization?
I don't think you need me to tell you that, Hormaz. You know, the ticker is telling you that already. A lot of these consumer staples are doing extremely well. So you have the likes of Colgate, HUL, Godrej Consumer, Dabur, Britannia, all of them doing well in today's trading session. Though the one stock which is not doing well is Varun Beverages. That's the one which is under pressure in an otherwise fairly steady market, at least as far as the consumption space is concerned. Remember, consumers were expected to show better performance in the second half of this year. So this GST cut will only come as an additional kicker to the overall sentiment. Over the last few quarters, if you notice, urban consumption was weak, rural consumption was gradually picking up. Now the street believes that maybe the worst is behind, and now this adds only as a further fuel to the fire which was already there in the consumption stocks, add to all of the underperformance that we've seen in the staples lately as well. So what our colleague Timsy has been gathering from her sources in the ministry is that there's talcum powder, face powder, hair oil, shampoo, toothpaste, dental floss, soap, toothbrushes, all of them which were currently taxed anywhere between 12 to 18% will come down to 5%, which basically means lower price that you and I as consumers have to pay, which implies that lower price, higher demand for these products and increased FMCG volumes. The only reason why names like Varun Beverages are sulking is because, carbonated beverages or caffeinated carbonated beverages, which were currently taxed at 28%, are now likely to be pushed into the 40% bracket. So that makes it a little expensive. GST on biscuits too, likely to be 5%. That's why Britannia is buzzing. Then you have the footwear stocks which are buzzing as well. We have Bata and Relaxo, because GST on footwear priced above 2,500 rupees will come down from 18% to 12%. And below 2,500, remember, as a nation, more than 90% of the footwear sold in the organized market is below 2,500 rupees. That will come down from 12% to 5%. And finally, we have the hotel stocks as well in focus. There is a bit of a devil in detail that we'll have to track, which is the input tax credit. Currently, 12% plus input tax credit proposed for hotel prices for sub 7,500 per night to be 5% X input tax credit. So this is something that we'll have to currently watch out for. Even for ready-made garments, the increase has, or the reduction in GST has increased the prospects for players like Trent.
Okay, all right, but input tax credit, that continues to remain the big talking point. We'll discuss that and understand that in greater detail. But let's talk about textiles. Vinny, earlier it was tariff, now it is GST. So it's been a busy time for the textile industry overall.
Absolutely a busy time for them, but this is at least a relief coming in, right, where we are seeing higher tariffs. Hope this actually something that will boost the consumption. Now, obviously, in terms of GST, what are the proposed changes that have come in? And this is according to CNBC sources. They are saying that a synthetic yarn, sewing threads, there are other forms of yarns that could see a shift. Currently, that GST is at 12%, could shift to 5%. Now, some products, including carpets, gauze, that could move to 5% as well from previously 12%. Now, the interesting part that has come in this time is the hike in that threshold price, right, for ready-made garments. Currently, what we were looking at is there was a 5% GST for products that are 1,000 rupees, right? If they are 1,000 and above, then you would be charged 5% GST. Now, that has moved up to 2,500 rupees. So that is the most interesting part that has come in right now, because then a lot more players will start benefiting from this one. And ready-made garments priced about 2,500 rupees were previously would attract now 18% GST from 12%. So up to 2,500 rupees, maybe that 5% GST, and then above that, you would see 18% GST. So yes, if they are exclusively, expensive items, that would become more expensive. But yes, still 2,500 rupees, it will be cheaper. And that is why we're seeing, positive signs that could come in for ABFR, Relevant Fashion, Page Industries, Vardhaman Textile, Vedant Fashions, among some of the names.
Thank you very much for that. And let's round up this discussion with Sudarshan joining on auto and cement.
So both the auto and cement sector will see a reduction in GST as far as like what information we are getting from sources. So first talk about the auto sector. Most of the companies will benefit as we are expecting the GST rate might be reduced to 18% from the current rate of 28%. So first talking about ambulance vehicle, motor vehicles, that might see a reduction to 18%, and the biggest beneficiary of this would be Maruti. Second, for petrol, diesel, LPG and CNG vehicles, there might be a reduction, but for petrol vehicles, it should have the capacity up to 1200 cc, and in length it should be of 4000. For diesel, it should have the capacity up to 1500 cc, and in length 4000. Biggest beneficiary if GST rate is cut would be Maruti, M&M, Hyundai and Tata Motors. Now coming to bikes. So for bikes and three-wheelers, again reduction is seen to 18% from 28%. And for motorcycles, it should be up to 350 cc. So biggest beneficiary would be Eicher. So for Eicher, almost 86% of their portfolio have the bike with capacity less than 350 cc, and similarly for Hero Moto, almost 95% of their portfolio have the capacity less than 350 cc. So both of them would be biggest beneficiaries. Auto parts also would benefit because there also we might see a reduction, and biggest beneficiaries here might be Endurance Technology, Bellrise or Sona BLW. But for certain segments, there might be an increase in GST to 40% from 28%, and those are racing cars, motor bikes having capacity of more than 350 cc, and motor vehicles having capacity of more than 1200 cc, and in length if it is more than 4000. Now in the cement segment, overall rate is going to be reduced to 18% from 28%, and brokerages believe that if rate is reduced, now price would come down by 7 to 8%. So overall, it would benefit companies like Ultratech, Shree Cement or Dalmia Bharat.
Okay, all right. Thank you so much for explaining that to us, Sudarshan. But more on the GST front.